Have you ever wondered if it's possible to start investing with just $100? Indeed it is. In the world of finance, every journey begins with a single step, and that step doesn't have to be a giant leap. The key is to start somewhere, and $100 might just be the perfect starting point. In this video, we're going to explore the seemingly daunting world of investing, breaking it down into simple, digestible bits. We'll discuss the importance of investing and how it's possible to kickstart your journey with a small amount like $100. We'll delve into current trends in the investment world, ensuring you're equipped with the knowledge to make savvy decisions. So whether you're a seasoned investor looking for a fresh perspective, or a beginner eager to dip your toes in the financial waters, this video has got you covered. So buckle up and join Dr. Samuel as he guides you on the journey to financial growth. But before we start, don't forget to subscribe to the channel, like this video, and share it with your friends. This isn't just about you, it's about empowering everyone around you too. Knowledge is power, and when it comes to financial growth and investing, sharing this power can make a world of difference. So hit that subscribe button, give this video a thumbs up, and pass it on. Your one share can be the catalyst for someone's financial freedom. Now let's get started on your investment journey. Investing can seem daunting to beginners, but it doesn't have to be. Let's break down some of the basic concepts of investing, and in no time you'll be ready to start growing your wealth. First off, let's talk about stocks. Imagine you're buying a slice of a company. That's essentially what a stock is. When you buy a stock, you become a shareholder, owning a small fraction of that company. If the company does well, so do you. Your slice of the pie gets bigger and more valuable. But remember, the opposite is also true. If the company struggles, your stock's value might decrease. Moving on to bonds. Think of bonds as an IOU. When you buy a bond, you're essentially lending money to a company or government. In return, they promise to pay you back with interest after a certain period. It's like lending money to a friend who promises to pay you back with a little extra. Next we have dividends. These are a bit like thank you gifts from companies to their shareholders. If a company is making a profit, it might decide to share some of that money with its shareholders in the form of dividends. Not all companies do this, but those that do can provide a regular income stream for investors. Finally, let's talk about returns. This is the money you make from your investments. It could come in the form of dividends, as we just discussed, or from selling your stocks or bonds for more than you paid for them. The goal of investing, of course, is to get a good return on your investment, often referred to as ROI. Investing is a journey, and like any journey, it's essential to understand the basics before setting off. It's about more than just making money. It's about growing your wealth, planning for the future, and maybe even making a few dreams come true along the way. With these basics, you are ready to start investing. Now it's crucial to understand the current trends in the world of investing. In this ever-evolving landscape, a few trends have been shaping the direction of investments recently. Firstly, let's talk about ESG investing. ESG stands for Environmental, Social, and Governance, and this type of investing has been gaining significant traction in recent years. Investors are increasingly realizing that they can make a difference in the world while also making a profit. They're looking at companies that prioritize sustainable practices, positive social impact, and strong governance. This trend signifies a shift from traditional profit-focused investing towards a more holistic approach that considers the broader impact of a company's activities. Next, we have the popularity of tech stocks. With the world becoming more digitized, tech companies are at the forefront of this revolution. We've seen companies like those in the fields of artificial intelligence, cloud computing, and e-commerce grow exponentially. As technology continues to advance at a rapid pace, tech stocks are expected to continue their upward trajectory. However, remember that while the potential for high returns is tempting, tech stocks can also be risky due to their volatility. The third trend we can't ignore is the impact of COVID-19 on the market. The pandemic has disrupted many sectors, but it has also created new investment opportunities. For instance, healthcare and technology companies have seen a surge in demand, while traditional sectors like travel and hospitality have taken a hit. It's essential to understand how these shifts in the market can affect your investments. And lastly, we have the rise of decentralized finance, or DeFi. This trend has been fueled by blockchain technology and cryptocurrencies. DeFi aims to recreate traditional financial systems like lending and borrowing, but in a decentralized manner that reduces reliance on financial institutions. While still in its early stages, DeFi has the potential to revolutionize the financial industry and offers exciting opportunities for investors willing to navigate this new frontier. However, before you dive into these trends, remember to do your due diligence. Research extensively, understand the risks, and consider your financial goals and risk tolerance. Investing is not just about following trends, it's about making informed decisions that align with your financial objectives and values. Also, don't forget the importance of diversification. While it's good to capitalize on trends, putting all your eggs in one basket can be risky. A diversified portfolio can help you spread your risk across different sectors and asset classes. Keeping an eye on these trends can help you make smart investment decisions. As we move forward, the world of investing will continue to evolve, and new trends will emerge. Staying informed is key to navigating this dynamic landscape successfully. So, whether you're a seasoned investor or just getting started, understanding these trends can be a valuable tool in your investing toolkit. So how can you start investing with just $100? Well, the beauty of investing is that it doesn't always require vast sums of money to get started. In fact, with just $100, you can still make your money work for you and begin your journey to financial growth. Let's dive into some strategies that are perfect for this budget. Firstly, consider using robo-advisors. These are digital platforms that provide automated, algorithm-driven financial planning services with little to no human supervision. A robo-advisor collects information from clients about their financial situation and future goals through an online survey, and then uses this data to offer advice and automatically invest client assets. The advantage of robo-advisors is that they often have lower minimum investment amounts compared to traditional advisors, making them perfect for those starting with smaller amounts. They can provide a diversified portfolio, automatic rebalancing, and tax-efficient strategies, all for low fees. Next on the list are dividend reinvestment plans, often abbreviated as DRIPs. These allow shareholders to reinvest their cash dividends by purchasing additional shares or fractional shares on the dividend payment date. One of the main benefits of DRIPs is that they allow shareholders to take advantage of the power of compounding, which Einstein famously referred to as the eighth wonder of the world. In other words, as you reinvest your dividends to buy more shares, those additional shares will also generate dividends, which can then be reinvested to buy even more shares. Over time, this process can result in significant growth in your investment, even if you're starting with just $100. Another option to consider is investing in index funds. These are a type of mutual fund or exchange-traded fund (ETF) with a portfolio constructed to match or track the components of a financial market index. Index funds provide broad market exposure, low operating expenses, and low portfolio turnover. They are designed to keep pace with the overall market, not to outperform it. This might sound like a downside, but remember, the majority of active fund managers fail to beat the market. So, by investing in an index fund, you're essentially betting on the overall market, which historically has tended to rise over the long term. And what's more, many index funds have low minimum investment requirements, making them accessible even to those with a budget of $100. Of course, these are just a few of the strategies you can employ to start investing with $100. The key is to do your research, understand your risk tolerance and investment goals, and choose a strategy that aligns with these factors. And remember, investing is about growing your wealth over time. While we all dream of making a quick fortune, the reality is that slow and steady often wins the race when it comes to investing. It's about consistency, patience, and letting the magic of compounding do its work. So don't be discouraged if you only have $100 to start with. Even the most successful investors had to start somewhere. And who knows, that $100 could be the first step on your journey to financial freedom. Remember, the goal is to grow your wealth over time, not to get rich quick. While investing, it's easy to make mistakes, especially when you're just starting out. In the world of investing, knowledge is your most valuable asset. One common misstep new investors often make is diving headfirst into an investment they don't fully understand. It's like trying to navigate a ship through a storm without understanding how to read a compass. You wouldn't do that, would you? So before you invest your hard-earned money, take the time to learn about the investment. Understand its workings, its risks, and its potential returns. Another common mistake is putting all your eggs in one basket, or in investing terms, not diversifying your portfolio. Think of your investments as a team. If you only have one player, your team is weak and vulnerable. But if you have multiple players, each with their unique strengths, your team is stronger and more robust. Diversification helps to spread the risk, and can potentially maximize returns. So don't just stick to one type of investment. Spread out your capital across different sectors, asset classes, and even geographical locations. Now let's talk about expectations. We live in a world where overnight successes are glorified, leading many to expect immediate returns on their investments. But let's not forget the adage, Rome wasn't built in a day. Investing is a long-term game. It's about patience and consistency. So, don't be disheartened if your investments don't yield immediate returns. Stay the course, keep learning, and keep improving your investment strategies. Remember, investing is not a get-rich-quick scheme. It's a journey, not a sprint. It's about making informed decisions and taking calculated risks. It's about understanding that losses are part of the journey, and learning from them is what makes you a better investor. So, whether you're investing $100 or $100,000, avoid these common mistakes. Understand your investments, diversify your portfolio, and have realistic expectations. By avoiding these mistakes, you can increase your chances of investment success. Investing is a journey, not a destination. These words resonate with the essence of our discussion today. We've ventured through the labyrinth of investment basics, dissected current trends, and tackled the art of starting your investment journey with just $100. We've also shed light on some common pitfalls to sidestep on your path to financial growth. Let's take a moment to revisit our journey. We started by understanding the essence of investments. It's about making your money work for you, not the other way around. We dove into the world of stocks, bonds, mutual funds, and even cryptocurrencies. We learned that diversification isn't just a buzzword, it's a safety net, a way to spread your risks and optimize your returns. Then, we navigated through the currents of investment trends. We saw how the investment world is ever-changing, how today's winners might be tomorrow's losers, and vice versa. We recognized the importance of staying informed and adapting our strategies to ride these waves of change. Our $100 investment blueprint was a testament to the fact that you don't need a fortune to start building one. We explored robo-advisors, micro-investing apps, and index funds. We realized that $100, though seemingly modest, could be the seed of a bountiful financial garden. Lastly, we acknowledged the common mistakes that could potentially stunt our financial growth. Overconfidence, lack of research, impatience, these are not just mistakes. They are roadblocks on the path to wealth creation. We committed to avoiding these pitfalls, to learning from our missteps, and to remaining patient and persistent in our pursuit of financial growth. Now that we've retraced our steps, it's time to embark on your own journey. Remember, there's no right time to start investing. The best time was yesterday. The next best time is now. Let your $100 be the first stepping stone on your path to financial freedom. Remember, every great journey begins with a single step. And your step, no matter how small, matters. It's not about how much you invest, it's about starting the journey. It's about learning, growing, and adapting. It's about making your money work for you. So why wait? Begin your journey today. Take that first step. Let's turn your financial dreams into reality, one investment at a time. Don't forget to subscribe, like, and share this video. Let's grow our wealth together with Dr. Samuel.